All right. Good morning, traders. Hope you're doing great this morning. We are going to get started with the live session here on YouTube. I love doing this session with all of you. I hope you're finding it valuable. If you are, go ahead and hit the like button. It takes a couple of seconds, but it helps me to get the video out to other traders that might be struggling in the current market conditions. To be honest, this session is really about swing trades. And for me, my main focus, just given market conditions, has been on day trades. But I'm always looking for a opportunity to start some swing trade positions. So I do this process every single week. And I can tell you not a lot has changed as far as strength in the market. I like to focus on the areas of the market that are outperforming or that are strong because we are in a bullish trend. And that means I'm looking to buy a dip in those strong areas of the market to play them back to the upside for potentially new all-time highs. So, like I said, my focus over the last couple of months has been intraday trading and, of course, collecting profits on my longer term uh, trades, right? So, trades of equity that I have been in for a year, mostly longer than a year, but as the market creates new all time highs, that means most of the equity that I own is also up near highs. And so I collect some profits there as they hit those targets. So that's what most of my trading has been over the last couple of months. And I will continue, of course, to intraday trade and take these swing trade setups when they present themselves. So let's get started. I'm going to start off by looking at SPX, the cash settled S&P 500. We are very close to all-time high here. This is a weekly chart. The week of Thanksgiving was a nice, strong, powerful, bullish move from some support. This is the buy zone that price pulled back into the week before Thanksgiving. Good morning, Jon and Gary, everyone else. This is the buy zone that price pulled back into the week before Thanksgiving, and then we got that beautiful move out on Thanksgiving week. And then this past week that just ended, it was bullish. It closed above the prior week's close, so it was bullish, but honestly, look at the size of the candle. It was more consolidation than anything else. We'll see that on the daily chart here on SPX. So here was your Thanksgiving week move, basically. And then 1, 2, and 3 days of consolidation. Thursday, we broke above the body of that initial candle right there. So I'm not calling that a consolidation day. And then, of course, on Friday, we closed above Thursday's close. So another day to the upside. But notice the topping wick here and the close. We closed closer to the middle than we did the top. That's pretty much indecision there. We have Fed rate cut decision coming up next week. Participants in the market could be waiting for that kind of data. I don't really care what the catalyst is that gets us moving in one direction or the other. All I care about is that I know what my plan is, what I'm going to do as price pushes up into a sell zone or a buy zone. So if you're looking at my daily chart here on SPX, the upper WE, that stands for upper weekly edge. This is an indicator that Trendy John created well over a decade ago, and the upper edges represent a playing field of supply or a sell zone resistance, call it what you want. Nonetheless, we know that between 68.84 and 69.20, the all-time high, there is selling pressure in this area. I believe that's why we got that topping wick there. Then down here, the other zone that I want to pay attention to this week is the lower weekly edge. Lower weekly edges represent a playing field of demand or a buy zone or support, call it what you want. That is this area here at about 68.10, 68.11 on SPX. So whatever catalyst is coming out in the market, that's great. It's always good to be aware of those catalysts, but I'm not going to trade based on those catalysts unless they push price into a zone that I have on my chart. All right. So the main trading range that I will be paying attention to in SPX next week is going to be between 68.10 and 68.85. Everything in the middle of this is levels that I can intraday trade off of. But as far as swing trading, which is what this session is about, I don't want to mess in the middle here. All right. I'll take a look real quick at the 4-hour chart. It's not going to look a whole lot different, except I want to point out that lower weekly edge that I was talking about. That's that yellow line right here, the buy zone for this upcoming week. Notice that it is in confluence with the 23.6 Fibonacci and the 38.2 Fibonacci. This is what we call the bull channel. Pullbacks into a bull channel in a bullish trending market across all of the time frames that we pay attention to. This is a buy the dip zone for me. So on just trendy edge buy zone, based on that and the confluence of the bull channel, this is going to represent my overall buy zone for next week for swing trades. So that zone is 68.07 by 60. I'm going to use the big round number, 67.50. Buy zone down here, and I'm focusing on the buy zone because the overall trend is bullish. All right. All right. As a little bonus for y'all, I use a 2-hour chart to create my daily intraday trading, day trading blueprints. And so I thought it would be cool if I show you how I create those blueprints real quick. First off, the only line I have on this day trade chart is the all-time high on SPX. The next thing I'm going to do is I'm going to look at the current trend. All right. And that is right here. For weeks and weeks, I had a primary Fibonacci measuring this downtrend. Well, that's changed. All right. Because price took out the 618. Number one, that's what equals a trend change. because price took out the golden Fibonacci level. Bulls got up and above the 618. The 618 held as support and the trend changed. That's when I started measuring this up move. Once that trend changed back in here. All right. Well, now that price has not only taken out the golden Fibonacci level, but it also came and hit my 887 target. We love to do a trade in the trendy room and SPX room at Simpler Trading, and it is a 618 to 887 trade. And this is a trade that is profitable or works out 85% of the time. That's good probability, and it's a trade that we love to trade, not just from a swing trade, but also intraday. Well, we hit that target. So now no longer am I measuring this move right here. All the Fibonacci that I'm going to measure for my day trade is going to be based on this swing low to this swing high. And that's going to give me, right, the lower weekly edge. I've already pointed that out on the daily and the 4-hour charts. And then the bull channel down to the 38.2, but I told you I want to use that round number of 6750. I'm going to use that big round number, and that, my friends, is going to represent the major, what I call major buy zone for possible swing trades next week. But it also, if we pulled back intraday into that zone, it would also be a buy the dip opportunity there. Then below there, I am going to mark this golden profit area, and it also has confluence with trendy edge and inside and up candlestick structure. And I'm using this wick low here rather than that 618. It's barely any different at all. So not a big deal. I just want to use the candle structure itself. All right. So those are my two buy zones below current price that I would be paying attention to next week for intraday trading and swing trading. Now, let's talk more about the intraday levels that I like to have on my chart. And I'm going to zoom in here so that you can see this future upper weekly edge. That's definitely going to be a level on my day trading chart. So I'm going to label that upper weekly edge like that. And that way people in the our traders in the SPX room know what that line is there for. Is why I label it. And then I'm also going to mark the lower daily edge. That is this brown or orange line right here. That's an intraday day trading buy zone. All right. I don't pay attention to it necessarily for swing trades, but for day trades, absolutely. So I'm going to label that real quick. All right. So now I have an upper weekly edge, and you can see that upper daily edge is just above the upper weekly edge. I'm not going to put a line there for now. Then what other candlestick structure or edges do I have below the lower daily edge? That's going to be this monthly edge right here and this inside and up candlestick structure. So I want a line that represents support because price is currently above it. It represents support, and it would be a target if I was playing a trade to the downside. Could also represent a potential buy zone if price dips back into here because it's candlestick structure. Then I'm going to mark the bottom of that wicking candle right here because of the inside and up structure. All right, so that's going to give me my levels that are below price. Now, as far as levels between this upper weekly edge, upper daily edge, and all-time high, I know right away yesterday's high is a level that I want to have on my chart, and I'm going to label that real quick so that everyone knows what it's about. Yeah, Rom, you can ask a question if it has something to do with what I'm talking about. You bet. All right, so that is yesterday's high and a level above, or a level that I would target above where price closed on Friday on the way up to the all-time high. Then I want to see if I have any candlestick structure between 68.95 and 69.20. No problem, Rom, at all. Rom asks, is chop a squeeze slash compression? Yes. So chop is just price is stuck between two levels, an area of support, an area of resistance, and it's just coiling. Think of it like a coiling spring that is just building up momentum for a move in one direction or the other. So as price just sits here, sits here, sits here, you see it right here, Rom, on the chart. It just sits there, sits there, sits there. These are 2-hour candles. So basically, price chop between this 15-point range for 1, 2, 4, 6, 8, 10, 12 hours, 12 trading hours, because this is SPX, right? 12 trading hours, price just sat there. Then it got a gap up and then sat there for 2, 4, 6, 8 more hours. All right. So we're just building up compression here, and you can see it down here on the TTM Squeeze Pro. Okay. So, yeah, great question. And you don't have to be sorry for sure. All right, let's look at and let's go to the left, see if we have that candle structure, any kind of candlestick structure that is above these edges, right? Above, but before the all-time high. And do you see the inside and down candlestick structure there? That's going to give me another target to the upside on the way to the all-time high. So that, my friends, is going to create my daily blueprint for Monday. It's going to look just like that. All right. So now let's get started with my bullish watch list based on areas of strength in the market and names that I am interested in trading potentially for swing trades. I'm going to go to Alcoa first. This is a metals and mining name. Metals and mining continues to be an area that is showing strength in the market. My zone to buy on Alcoa is going to be here at 41.72. This is based on Fibonacci, but 41.72 by 38.88 right here. I've got some confluence with trendy edges in here. I got confluence with the 9 EMA on the weekly chart at the bottom of that zone. This is going to be my buy the dip zone on Alcoa. Now I do have a sell zone right up here at 45.18 to 47.77, represented by an upper yearly edge. So that is going to be a target to the upside, and then targeting 54 to 57.88. So my buy zone is 41.72 by basically 38.75. That's going to be my buy zone. This is first target and second target up here at 54 by 57.88. All right. For American Airlines, Jets, JETS is another sector that has been performing very well. Good morning, Mama. Good to see you. Has been performing very well. And it is a name that I would be interested in potentially trading. And what I'm looking for is a little higher time frame. The weekly chart here on American Airlines has a nice buy zone between $13 and $11.93. I like that zone to buy a dip, and I would be playing it back up to this upper yearly edge here at $17 by about 18, 15, $19 somewhere there. If I measure this move down, okay, you can see we're at some key resistance, the 618 golden Fibonacci for American Airlines here. I would expect a rejection, and I am anticipating that possibly that rejection pulls me back to my buy zone. I don't know that it's going to happen this week, but I need to be prepared in case it does happen this week. So I have an alert set on my chart for a potential pullback into this zone. This is a trade that I would be looking to trade out into the first quarter of 2026. So it wouldn't just be a trade for next week, it would be a longer, a couple of months, okay, trade, because I'm looking at a weekly chart and weekly price action. But the trade would look like this: buying the dip between 13 and 11.87, and then targeting 1505, 1660, 1790, and 1910. All right? All right, now I have my alert set there. Now let's talk about Apple. Apple came very close to my buy zone that I talked about in the Mastering the Trade room at Simpler Trading, also in the Trendy room. It didn't, I had a bid in here to get filled on a pullback to about 277.67. It did not fill because price didn't come down there. So I'm continuing to watch this area. The bid I took off, I don't like having GTC bids out over the weekend just because you never know. If I don't check it ahead of time, ahead of Monday, and something crazy happens and the market gaps all the way down to here, I don't want my bid that is based on 277.64 to get filled when price is at 270.63. So I took that bid off. I'm back to an alert here. I like this area to buy. Number one, because it's a lower weekly edge. Apple has been very bullish. We just recently made new all-time highs. So I'm definitely interested in trading this. You're 3 days down on Apple cycle, 2 to 3 days up or down. Then a couple of days, a day or two of consolidation, and either the continuation down or a reversal back up. This is like the market taking a breath, or Apple taking a breath after this huge run right here. And I told you that was some key Fibonacci area. And let me show you that measurement so you can get an idea. You see it? The golden pocket. So that is my trade plan for Apple. This is a trade that I would buy out to, I believe my bid was on the 280 calls for December 19th. It was not filled, but that is more than likely what my bid would be, or the strike and expiration I would choose on a pullback here to the lower weekly edge. We'll see if that fills or not. As far as targets, it's going to be 284 and 288. All right, let's talk about Ally. Had this on the watch list last week. I was looking for a pullback to here, but we created a new buy zone, and this is also Fibonacci levels as well. So I got a confluence here. This represents the bottom of the bull channel as well as that golden pocket there. All right, so my pullback or my buy zone would be 41.20 to 39.36. Yes. And then as far as targets, the first target, an area of resistance, this is the upper weekly edge. It's going to be about 42 and a half, and then targeting 43.85 to 44.83. Rom, yeah, to answer your question, when price is just chopping, that's correct. It didn't, hold on one second. We didn't get, there was no clear direction in those hours that we were just trading in a 15-point range. The Bulls and the Bears are playing tug of war right now. Okay. All right. That is Ally. This is my buy zone here 41.20, 39.36, trim, target. All right. All right, let's look at Applied Digital. This name is moving quite nicely. It does have some resistance up here nearby. You're welcome, Rom. So I want to show you the buy zone, which is going to be this inside and up candlestick structure. My lower weekly edge is inside of here. Now, I don't just buy right at the level unless I'm taking an aggressive approach like I am on Apple, but I would scale into Apple. So even if I took the aggressive approach here on Applied Digital, if I bought at 27.85 on a touch, it would only be half of my allocation. Then I'm saving the other half of allocation if we get further weakness in this buy zone to add to the full amount I'm willing to have at risk on Applied Digital. All right, so my buy levels on Applied Digital is 27.85, 26.40, and a stop is a candle close below 25.19. First target is going to be 31.31, then 33.81, 37.17, and 40.20. All right, those are areas of resistance based on candlestick structure and trendy edges as well as Fibonacci on the way back up. Okay. AVGO, I need to take this one off my list. It has earnings next week, and I won't be trading that earnings. All right. I trade straight up directional. I buy calls, I buy puts, and it's you can get extreme volatility crush after earnings, and a straight up call or put can lose a lot of premium value just based on that vol crush. So because I don't trade spreads, I really don't place a lot of earnings trades. So that's why I removed AVGO there. All right, let's talk about Barrick Gold. Barrick Gold has a buy zone here, inside and up. The lower weekly edge is slightly above it. It's about $1 above. You also have the confluence of the daily cloud right here. But I'm going to leave my alert here because GDX or gold miners has shown some weakness. And if that weakness continues into next week, I want to be more conservative on where I would start a position on Barrick. And that's going to be down here at this inside and up candlestick structure. But again, that would be a starter, so half allocation, and I would be targeting this zone down here to add to full allocation on Barrick. On the way back up, 42.75 is the upper weekly edge. That would be a target. Then 44.73, 47.82, and 49.90 would be my targets there on Barrick. All right, up next, BAC. We had a great trade on BAC, and it's still going to make my watch list for next week or even the week after. Now, the all time high on BAC, we came very close to hitting it. This was a sell zone up in here. I removed the red rectangle, but just know that you have candlestick structure up near the all-time high that made that a sell zone and the target for my swing trade that I got out of the trade. Now, what am I looking for a pullback? Well, notice the lower weekly edge, the inside and up candlestick structure, plus measuring this recent move, the golden pocket area. So this is my buy zone, 53.25 by 52.27 on BAC. I would be playing it back up to the upper weekly edge. I believe this is upper monthly edge and all-time high. All right? All right, let's look at Cleveland Cliffs here. Let me take off that stupid cap lock because it's going to drive me crazy. Maybe. Forget it. All right, Cleveland Cliffs. Let's take a look. This name has not been super bullish this year. It's actually not bad. It recovered about half of the year's range, but then it sold off big time from this yearly edge mid. I like it into potentially trading for a leap type trade. If I get a pullback here to 1124 by 990. Now, I don't know that I would necessarily buy out 12 months and sit in Cleveland Cliff for over a year. So I'm thinking more like March, April expiration, and I want to target back up at this 1541, 1647, and finally 1727 by 1810. Now, this thing doesn't move a lot. And when I say it doesn't move a lot, it moves about $3. It has $3 ATR per month. I'm trying to go from 11 to 17. Okay, so I need to give myself, that's 2 months worth, right? Well, I like to double that. So I need to give myself about 4 months to expiration, and that's why I mentioned the March, April time frame here for this trade I did on Cleveland Cliff. All right, let's talk about Cisco next. I did not get my entry on Cisco. I have my alert still set back here. I was waiting for confirmation in this zone, and unfortunately, the confirmation came, but the price had moved so quickly that it was already near my first target, meaning I wasn't going to start the trade up a couple of dollars and right at my first target. So I have to remain patient. That patience is going to come now at this inside and up candlestick structure on Cisco, which is 76.58. This zone is still in play, but I would not anticipate a further pullback, and I can edit this zone to pull my stop area up to that 618 now. Because we did make a higher high, that allows my stop to be higher. So now this trade is going to be about the same amount of risk, which is approximately a dollar 75 or so of risk, and upper weekly edge is still a target up here. Then this sell zone 78.96 by 80.06 and then $82. So alert is set here. We created inside and up. A pullback here, I would use half allocation to start a position and then add to it on a pullback to the lower weekly edge and this golden profit area right here. All right. And that's a trade for Cisco. Let's look at Delta Airlines. I've already talked about American Airlines and what it's doing. Well, Delta also looks great, but it is in an area of resistance. So I would look to wait for a pullback to this buy zone here. I have a yearly edge, a monthly edge, and a weekly edge, all in this buy zone. I like this zone for a buy the dip opportunity on Delta. That zone is 64.40 by 62.10. And then I'm going to target right up here about 67.5 by $70. All right, so that is my buy zone and my target zone for Delta. Let's look at DuPont. DuPont made a new inside and up candlestick structure here. You got the daily 9 EMA, the 21 SMA, and the lower weekly edge in this zone on a pullback. I would be waiting for confirmation and then going long here on DuPont, playing it up to the upper weekly edge, then 41.23, and finally 41.96 by 42.82. All right, that is the buy zone and the sell zone for DuPont. Let's look at Guild. This one did some, I don't know, it has really pulled back a little more than what I was expecting it to pull back. But when I went to Good Morning Skin from Austin, Texas, Skin, um, when I went to the weekly chart, I was like, okay, that's interesting. So now I have this potentially pulling back here to the inside and up where we got a buy signal on the weekly chart. So for Guild, my buy zone is going to be based on this weekly chart, 119.40 by 114.02. And I'm first targeting where we created the inside and down based on last week's down candle. All right, and that's going to be 125.89 by 128.70. If we take out that all-time high, I will use extension targets to find next targets. But for now, the trade idea And I'm not just buying this dip blindly, right? I want to wait for confirmation inside this zone using 2-hour candles, waiting for higher lows and a break above to go long and playing it back to here. All right, let's talk about gold, GLD. It's in resistance. It's in a sell zone on the weekly chart. On the daily chart, ROM, here's another great example of price just consolidating. So gold has just been consolidating really all of last week. It just spent its time sitting right here. I mean, it's just boom, 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 closing or opening all right in this area of 28 or 386. So the buy the dip on gold is going to come here at this lower weekly edge. That's where I'm going to put my alert. Okay. That's where I'm going to put my alert. But I also have this nice inside and up buy zone down here on the daily, and I want to save some room right in here, okay, to add to my trade. So I'm going to first watch the lower weekly edge on gold, but I would only do a half allocation trade off that lower weekly edge. And hey, if it goes up to my first target of 390.62, great. Sorry, Mowgli's coming in. Good morning, beautiful. You want to show the room your cast? Okay. Sorry, guys, you get to see her cast. Here, sit on Granny's lap. Are you ready? Come here, Mog. So, Mowgli, for those of you that don't know, she was running in the hall. She tripped on her Crocs and she broke her arm. Can you see it? Here, right there. So she gets to be in this cast for 4 whole weeks. All right, I love you. Granny's working. All right. Sorry, guys. Yeah, she got sparkles on it too. Brooklyn Marie, out of my room, please. Thank you. I love you. Rom, you want to sign it? She has had her entire class sign it, all of us. But she was crying last night. She was trying to take the cast off herself and said, I want this cast off. And I was like, I'm sorry, honey. You do not get a choice in the matter. That thing is there to stay for 6 weeks. Sorry. But she was bawling. How do you tell a 6-year-old there is no removing that cast? All right. So gold. I'll get back to work. Sorry, guys. Lower weekly edge would be my first buy. Then I'm playing it to these targets here. All right. All right. Let's talk about Google. I've had a date with Google at 312 forever, and it didn't pull back there. Well, now I have a lower weekly edge at 315. So I'm going to set my alert now at 315. All right. I still like this level on Google, but I've got to follow the trend that was an inside and up candlestick structure. And I just say, hey, we might not get the pullback to 312. So I'm going to move my alert on Google to 315. I would still be targeting 322 and the all-time high up here near 329. All right. Hey, Debbie. Good to see you. All right. So that's my plan now for Google. I had an alert set at 312 all last week, never came down there. And so now I'm moving it up to the upper weekly edge, the daily 9 EMA, and I'm targeting 322 and the all-time high. Let's look at Warrior. And this is another metals name. I like it right here. Okay. You see the inside and up? That is a beautiful area for me to, I'm going to move my buy zone from here to here. And I'm using 78.50 by 76.92. A pullback to this zone is where I'm wanting to buy the dip. And then as far as targets go, I get to move my target. Well, no, that's an upper monthly edge, I remember. So I'm targeting the upper monthly and upper weekly edge right here, and then 85.86. All right. So that is my trade plan now for Warrior Metal. Trying to get a play on some metals and mining name because XME, guys, that sector, I'll just check my list here. From a year to date look back, top 5. From a 3-month look back, top 5. From a quarter to date look back, top 5. From a month look back, top 5. From last week look back, top 5. A lot of strength, right? So I want to get exposure via Alcoa or HCC or HL, some of these names. And so I will wait. I will not, I will not FOMO trade up at the top. I need a dip buy and I have my alert set, and these are the targets above. Okay, let's look at Hecla. Woo, need to clear that drawing set. It's definitely way different, but look at the move. Just, I mean, Thanksgiving week, that thing shot up. Last week, doji candle here, indecision, taking a breath, all of that. You can see it on the daily chart as well. It's taken a breather. Just to trade it off the edges is going to be 1667 up to 1793. But Hecla isn't one that I like as well as Barrick, and both of these are miners. So if I were to set my alert now to buy a dip, it's going to be down here near the Golden Profit area, right? And I would just trade this Golden Profit area because the daily 21 lines up there as well. And in the event we get a pullback down to, a lot of people call this reversion to the mean, down to 1546 by 1483, that's really where I would be most interested in putting some money at risk on Hecla. And then I would play it back up to 1667, 1793, and ultimately 1925 by 2150. Right now, it's just in a consolidation phase. All right. All right. J and J, it did have some pullback last week. ROM, the golden profit, we coined that in the trendy room, golden profit. It's the 50, so the halfway retrace by the golden Fibonacci level of the 618. It's the 50 to the 618. All right. J and J has pulled back. We came up here, made a high, right? Then we created an inside and down candlestick structure. That's going to line up with your upper weekly edge. Then we consolidated again for 2 days and then 2 days down. So J&J could be getting close to a bid, but I want to see higher lows inside of this buy zone. All right. And I'm not seeing them yet, even on the smaller time frames. So I will continue watching J&J down in this zone, which this zone, ROM, is the bull channel. All right. The 236 to the 38.2, that's the bullish channel when measuring an uptrend. The golden profit area is right here on J&J. All right. One thing I've learned about J&J is you need to be patient with J&J. All right. Um, it can move and it can move violently, but it can also just stay stuck for quite a while. Yeah, so Jon, the way that I trade J&J is take for instance this example. Let's say that it starts making higher lows and I get in and it's sorry, I thought I was going to have to sneeze. I get in at somewhere around 201, 202. Well, I'm going to look at my target of 205 to 207, and I'm going to go to if I just want to trade it 2 weeks, right? These are affordable for my account at 200, the 200 calls. But let's say I wanted to give myself more time and trade out to January. Well, I could go and buy the 210s. That's at the top of my target, right? But really, I would err on the side of caution. And I know that if price is currently at 202 and I'm getting the dip by somewhere near 200, the cost of that $200 option is going to be cheaper. And even going out to January, I can still afford to buy the at the money. So it might have been different before, Jon, but it's still affordable for me. ROM, either one of those zones are a buy zone. I ignore the bull channel if it isn't a very strong bullish trending market. And I put my focus on the golden profit area. All right, let's look at Southwest Airlines. Another example of a great move. Okay. I don't know why this is on the weekly chart, but let me put the daily chart down here. You can see right up and we wicked above the high of that sell zone there. Now, I didn't get the pullback to go long Southwest. So I need to remain patient on this name, but I want to show you where I am interested in really getting a dip buy opportunity now. So let me clear this drawing set here. All right. And I just need to see where the all-time high. Oh, we got plenty of room to run. All right. So here was that sell zone inside and down right here on the weekly chart. You can see we came right up to the top of it. And I don't know if we reject or we don't reject here. But based on this weekly chart, if I show you daily candlestick structure, those lines, right, on that weekly chart is this inside and up structure. So a pullback for me to this area where we created inside and up is the buy zone. Okay. On Southwest now. It's moved up a couple bucks. Let me turn these clouds off so I can see. All right. All right. But notice how you got this imbalance right here. So this is an example that if we get a pullback here to 35.31, I would start, use half allocation, and then add to it in this daily buy zone. All right. So my alert is going to go here to start a position. My stop would be below 34.23. My target is going to be upper weekly edge by that topping wick there, and then these higher targets on the weekly chart. All right, so overall, my buy zone is going to be 35.31 to 34.23. First target is going to be back up here near $38, then 41, 44, and 48. Okay, that's my trade plan for Southwest Airlines, LUV. All right, there's my buy zone. First target, second target. Okay, and I can show you the candlestick structure. Well, no, I can't because it goes way back. But you would have to put a whole lot more time, look back to see the candlestick structure here at 41, 76, 44, and 48. All right, let's look at Merck. Merck came up to 105.07. We created a engulfing candle from this very nice weekly candle the week of Thanksgiving. We basically took it back. This is, you probably, unless you've been in the room for a long time, might not have heard this. It's a hot dog pattern. You got a bun. Here's your hot dog, and typically we'll get a bun back up. So it could be, right, that Merck comes back up to 105.07. The next target on Merck is 114.71 and then 130.53. The buy zone, though, for me is going to be all the way down here on this weekly chart. As far as the daily chart, Merck has actually pulled back into this bull channel. See it there? It's pulled back into the bull channel. So I'm going to watch it here on the daily chart. See if we start making higher lows and we turn around here in the bull channel. If we do, I will go ahead and start the trade. If we don't, then I'm going to focus more on about 94 to 86.69 for buy the dip on Merck. All right. Yes, Rom, that's correct. The upper targets based on candlestick structure up and to the left. All right. Let's look at NEM Newmont Mining. It's consolidating, FYI, very much so. You see the inside and up with the nice looking move to the upside. I've got my first alert to watch this for a dip buy at 87.20. 87.20 Newmont. If I get a confirmation that price is turning around here at 87.20 by going to like a 1 hour chart and get higher lows, then I will take the trade from there. I'm first targeting 90.88 by 92.36, then 93.43, 96, and 98.58. All right. If I do not get confirmation that price is turning around there at 87.20, I will next focus on 84.15 by 81.34. All right. PACS. I am not familiar with this name. It showed up on a scan that I was doing, and I have no idea. If y'all know, you can let me know in the chat what PACS is. I didn't look it up because I really don't care what they do. What I do care about is this beautiful run, 1, 2 weeks, a nice continuation move. And this week has created an inside candle. Remember, I talked about that 618 to 887 trade? Well, that's what I'm kind of eyeballing here for PACS. I want to see 30.01 hold as support. If it holds as support, then I'm targeting 35.32, 39.80, and 43.92. As far as my zone to buy, that's going to be using that 618 that I want to see hold as support, as well as Fibonacci of this run, which is going to be the bottom of that bull channel. All right. So that's my buy zone on this name. 30.01 to 26.37. First target 35.32, 39.80, and 43.92. All right. PFE, this is more for, okay, thanks, Jon. Appreciate that. So it's a healthcare trade. And okay. So Pfizer, this more of a long-term type trade, okay, for sure. This is a lower yearly edge on Pfizer. I like the rounding bottom that Pfizer did right here. I like that it reclaimed the lower yearly edge. I like that on the test of it, buyers stepped in. It's not at a level I want to buy right here, but I am setting an alert right back at that lower yearly edge. And on a pullback, I want to look to buy and buy out, like, I mean, June, possibly, not just January expiration. I'm looking at going out, 6, 7 months for this name and just buying at the money. Yep, Rom. Hopefully, I just answered that for you. I know the chat comes across a little delayed. So I'm talking 6 months type trade, $25 calls, the at the money calls, out 6 months. If you want to scale in to the trade, I would start it right near this lower yearly edge and look to add to it at about 24, 23, and stop would be below 23.64, and these are going to be targets to the upside. All right. So Pfizer would be a longer term trade for sure. RGTI. First off, nice boom, 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 big, 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 big rally that started in September when these sorts of names, these quantum names, took off. Boom. Now we pulled back. We created a buy zone here, probably on the daily. Let me look. Yep, on the daily chart, we created this buy zone. It lines up with the lower weekly edge. 24.25 to $21 would be the buy zone for me, and these are my targets to the upside on Rigetti. All right. Rocket Lab. Rocket Lab. Right at resistance. So not where I'm looking to go long from. But notice that is a beautiful inside and up on this weekly chart on Rocket Lab. So a pullback to 43.5 by 37.5. This is where I'm going to get interested in buying a dip on Rocket Lab and playing it up to these Fibonacci targets. Simple as that. Okay. Buying the dip somewhere 43.5 by 37.5. And again, looking for that confirmation before I go long, and then playing it up to these Fibonacci targets. All right. SoFi did a public offering or something, 1.5 billion or some million, I don't know. Anyway, SoFi pulled back Friday. But it pulled back into support. Here's your lower weekly edge for SoFi this coming up week. It's in a squeeze. It's been in a squeeze for quite some time, like since the 1st of October. Okay. So I'm interested in SoFi right by where it's at right now. And then playing this back up to $30 and then 31.67 by 32.73. I'm going to have an alert at the lower weekly edge and assess the chart at that time. Or if you're the aggressive type trader, a pullback to 27.31 by $27 would be a buy the dip, but I personally want to save allocation on further weakness down to here. All right, but these are my targets to the upside on SoFi. All right, I went through all those charts, gave you a pretty in-depth analysis of SPX and what I am looking for next week. I'm not going to try to tell you that we're going to take out all-time highs. I'm not going to try to tell you that we're going to come back and test the daily 21. I'm not going to do any of that because I just don't believe that that is really beneficial. What I am going to tell you is I want you to find levels that you're looking to execute trades off of. For me, going into next week, the buy zone, which is where my focus is for swing trades, guys, because we're in a bullish trending market. My buy zone is 68.10 by 67.50. That is what I need to focus on rather than my speculation and what I think is going to happen. I need to be prepared that regardless of what happens, I have a plan at those levels. And the level where my alert is going for next week is SPX near 68.10. All right. All right, guys, thanks for hanging out with me for the last hour. If you are not already a member of the Trendy Trading Room or SPX Trading Room at Simpler Trading, be sure and check out the description. You can join myself and my trading partner, Trendy Jon, who has been my mentor for over 3 years, 3.5 years now. You can join us Trade Live every day, Monday through Friday, as well as some great education each day. If you haven't already, be sure hit the like button. Make sure you're subscribed to my channel. I post videos every week. And of course, you want to be notified when those videos are coming out, as well as any live sessions. I hope y'all have a wonderful weekend, and I will see you in the trading rooms on Monday.